If you are confused by inducement in SMC and you want to avoid situations like this here where you have a change of character and you're buying through here only to get stopped out, and you want to turn these into a profitable setup like I did here in Discord in real time, then this is the video for you, because in this video, I'm going to show you exactly how to do that step by step. So if we haven't met yet, my name is Justin Bennett, Forex trader since 2007, full-time since 2011. As always, all of this is my opinion only and not financial advice. So EURUSD 15-minute time frame. Let's go ahead and take a look at this here. I'm going to move this back to this portion of this trend because I want to show you something here with this BOS and change of character that we got within this trend. So this right here is what is called inducement. Now, in the moment, you wouldn't have known that just by looking at this chart here, at least zoomed in on this price action, but I'm going to show you why this happens. I'm going to explain why it happens and then show you how you can avoid it, and not only avoid it, but also turn it into a profit. Now, speaking of turning this into a profit, if you do want to see exactly how I trade SMC full time, check out the link somewhere here on the screen. It is 100% free. It's a free strategy course, almost 2 hours of content. I hold nothing back. It's all the steps that I use to trade SMC full time. If you don't see it here, check out the pinned comment in this video or see the description of this video. So with regard to the EURUSD 15-minute time frame, here you can see that we do have a downtrend, and this was, or at the time, it looked like a valid BOS and a change of character. Okay, now in this case, what we would typically be looking for is a buy on a pullback. Now you can see that we do have displacement down here, so we'd be looking for this fair value gap down here to fill before looking for longs. Okay, but in Discord, we talked about this at the time, and in fact, I wasn't buying this, I was looking for shorts here. And I'll show you why in a moment, but first, let's take a look at this here and I'll explain why this happens. Okay, so the market engineers liquidity, okay? And what it did is it induced buyers to buy on the break above here, okay, through this area, through areas like this, again here, again here. Now, each time it was building up liquidity where below these lows, okay, at least for the most part. Obviously, not everybody buying through these areas is going to put their stops in the same exact location, but for the most part, you had stops building below this low. So the market is engineering that liquidity. Now, you can see that once we get the move below, notice how it accelerates below this low back here. And there's a reason for that. Again, you have the stops that built up below those. So that's why you have this acceleration below the low. So what is it about this setup here that you could have avoided? What was it on this chart that you could have seen to show you that this was not a valid buy, and in fact you should have been looking for shorts? And for that, we have to zoom out here to a 1 hour time frame and look left. So one thing in my last few videos I've been talking about a lot is zooming out and looking left, because it's going to save you from so many losses. And the reason for that is that if you go back here, we have to go all the way back here toward this price action to understand why that failed. Okay, why that inducement sucked in buyers and essentially stopped them out. Okay, so looking back here, you can see that on this run up we did have this internal price action here. Now I mark this as a BOS and a change of character on the close below, simply because this right here, a BOS and a change of character, is not the setup. Okay, just because I'm marking this as a BOS doesn't mean that I'm looking to buy along here. And in fact, I've talked about this in other videos too, this price action here, and we talked about this in Discord as well. But below these lows, notice the displacement down here. Notice the unmitigated imbalance that formed back here. This alone, guys, meant that on this BOS, okay, this pullback here, this was always likely to fail. Furthermore, you can see where once we form these lows, right, what do we get into these lows? We had lower highs. Okay, lower highs into lows like this, you get, the unmitigated imbalance back here. This right here was destined to break lower. Okay, and we talked about this again in Discord in real time. So even though I'm not treating these as automatic opportunities, I still want to have this on my chart because it tells me who is in control of the markets. Now, as of this point, okay, as of this point over here with this sideways action, the last confirmed BOS or change of character that we have here on the hourly is this back here. We have a bearish change of character. Okay, because over here you can see this low right here, we did not take that out. We wicked below it. Yes, this was a liquidity sweep, and I talked about this in the SMC Outlook video where I said that a close above this high back here would open up this imbalance. But so far, if you look back here, right, there's nothing on this chart to tell you that buyers are now in control. The last thing on this chart is a bearish shift over here. Okay, so that's important to understand. And what you can see here is that even though this lower high is not yet confirmed, because we'd have to take out these lows to confirm it, even though at this time, this high isn't confirmed, so far we have the highs up here, we have the low down here, we have the bearish change of character confirmed, and right now the market is just bleeding out, right? There was nothing here to tell you that overall structurally the euro was bullish. So really, in my opinion, there was no reason to be buying over here. So that is the first point, right? When we talk about inducement in the market and how to avoid it, how to avoid getting sucked into traps like this, you've got to zoom out and look left. Okay, and look at the overall, external structure that's on the chart, because that's going to dictate what you are doing in the moment. Okay, so that's number one. Now, number two is going to be when we look back here, let's go to a 4-hour time frame. And let's look back here on this very aggressive move up. Okay, so specifically, I'm talking about this one right here. So what you notice here is that this low did tap into this fair value gap back here. But one thing that I've talked about in videos, and people disagree with me, but experience tells me otherwise, is that a lot of times on the high time frames, when you get a move like this, I often like to mark out the exact high that is the lower boundary of this fair value gap. So when we talk about a fair value gap here on the 4-hour time frame, you can see it's basically from this high right here up here to this low. Okay, so this is an area. Yes, a fair value gap is technically an area. However, again, I like to mark off the extremes of these areas. And the reason I do that is because on the 4-hour time frame, the daily, the weekly, you often get a market mitigating this entire area and coming back and fully mitigating this and testing this high. Now, that's important in this context because what you'll notice back here is that we did not fully mitigate this. Yes, again, this low right here, okay, did mitigate part of this fair value gap back here, but we did not mitigate the entire thing, okay? So again, you combine this right here, you combine this fair value gap back here on the 4-hour not being completely mitigated, okay? And then you combine that with the fact that, let's move back here, just kind of keep it fair to where this actually occurred, okay? So right here, and what you'll notice is, again, we have the market making lower highs and lower lows. We also have that confirmed bearish change of character over here. So we have all of this playing out, plus we have this fair value gap down here, which has not been fully mitigated. So again, there was no reason to be buying over here, right? There was nothing here on the chart to tell me that buyers were in control. Okay, yes, you had an internal shift. Okay, but an internal shift, when you look at this on a 15-minute time frame, right? An internal shift like this, guys, is not going to trump what you're seeing here externally over weeks or even months. Okay, now if we go back to a 4-hour time frame, what you'll notice here is if I do play this forward, you can see that the euro actually comes down here and takes out this area. And look at that right there. We do tap into the extreme of this fair value gap right off of this high down here. That was the low right here for the euro. Okay, so once we have this right here, once we have this full mitigation of this fair value gap down here, now you could potentially get an internal shift here to play imbalances like this one back here, okay? But not until you see this fully mitigated. And for me, I would have to see something more convincing, okay? So the whole point here is that the way you avoid inducement like this, the way you do not get sucked in, the way that you are not one of these traders here who gets sucked in by this little flip right here within a downtrend, is you zoom out and you look left and you also identify any high time frame imbalances that could serve as a magnet for price. And here we can see again off this high down here, we had this region down here, which was left unmitigated. And also we had this bearish downtrend intact based on this change of character back here. Okay. So again, you zoom out, you look left, you see here in the context of this little tiny internal shift was not enough for me to be buying this market. Now let's talk about why I decided to short this. Okay. Because on the surface, you could look at this and say, well, why would you short when you are getting this shift right here? Okay. So let's go back here toward this price action, turn on bar replay again, come back here toward this price action. And you might be asking, why would you be looking for shorts here, even though we've had this little shift here? Well, for me, guys, this didn't count. It didn't count because this was internal to this downtrend. It also didn't count because looking at this on the 4-hour, again, we had the unmitigated FEG down here off of that high. And to prove that this was the case, guys, this isn't just me saying it. This is not after the fact stuff. This is the call that I made in Discord, okay? So this right here was the short. I put on the short here. You can see the date and time right there. This was put on live in Discord for members to see. And you can see that, this was the setup here, entry, stop loss, and right there, take profit. And then you can see too, that down here is where I booked half. Now I did just book half on the rest of this for a profit. So both halves, book for a profit on this short, and I'll show you exactly why. So the very first thing to understand is, again, going back to why this was not a buy, we can see bearish change of character, unmitigated imbalance back here on the 4-hour. Okay. So those two factors right there meant that I was only looking for shorts. So if we go back to a 15-minute time frame, let's look at this here on this move lower. So to me, I was viewing this right here not as a change of character, but I was viewing this as an external high. We came up here and we swept internal liquidity. Okay, so I was looking for shorts only. Now, that right there is not enough for me to short a market. I need to see structure. I need to have some kind of context here. So now let's play this forward. Now, I've made videos on this before, guys, but what you're going to see here is that within this downtrend, you can see we had the highs back here. we swept those highs, and then the acceptance below this low right here, this is what I was shorting. Okay, so this right here is called a liquidity sweep reversal. In this case, though, it's a little bit different because we have it with the trend. Okay, this isn't occurring at the very top, at the very high. However, you can still see that we had a similar situation. Okay, we had the highs back here, we swept them, we then had acceptance below the lows. So all of those factors combined meant that I was looking for shorts here. Now, I only put on one trade last week, and it was this one right here that I called out in real time again. This Euro USD short, you can see right there is the liquidity sweep. The acceptance below, I was shorting this right here, and that was profitable. So this is the only trade I put on last week just because markets have been a little bit slow. But again, it was profitable, and that's all that matters. Okay. So this right here was it, guys. That's it. I mean, very, very simple, right? We had unmitigated sell side imbalances. We had the market trending lower. The last thing on this chart on the hourly time frame, which is what I use for directional bias, was a bearish change of character. Okay. Nothing here was bullish. There was nothing here bullish. Okay. And as you can see, the result of this again was the move down there toward those lows and to fully mitigate the imbalance that started back here with this displacement. Okay. So you can see fully mitigated over here. That was my target. In fact, my target was a little bit lower. Obviously, we didn't quite get that, reach that area, but that's okay. Again, took off both halves for a profit just this past week. And in fact, I'm now seeing something different on the euro. You might be seeing it too. We've been talking about that in Discord. I'm sharing all the details in there. So if you want to get access, check out that free SMC course. And then through that link, you're going to have a chance to join Discord. If you want to join, that's great. If not, that's okay too. So until next time, trade well out there. I will talk to you again tomorrow.